Hi, thanks for visiting my channel. 2023 has been a difficult year for real estate investors. Not only that it affected cash flow, it also reduced or eliminated mortgage paydown and extended mortgage amortizations. If you had floating variable rate mortgage with banks like Scotiabank and National Bank, you would have experienced a payment shock. And if you had static variable rate mortgage with banks like CIBC, BMO, and RBC, you would have experienced negative equity and negative mortgage amortization. There is 4 ways real estate investors make money: positive cash flow, mortgage paydown, active or passive appreciation, and tax deduction. In 2023, there was no positive cash flow, there was hardly any principal paydown, there was no price appreciation, but there was a large interest rate expense, which is the only silver lining from tax perspective. If you had static variable rate mortgage in year 2023 where your mortgage payments never went up but any additional interest was added to your mortgage balance, even though you didn't have to pay high mortgage payment out of pocket, but any additional interest charge was reported on your 2023 annual mortgage statement, this interest expense could be reported on line 8710 of Form T776, which is Statement of Real Estate Rentals. This could result in big rental loss, especially if your property was built before November 2018 and is under rent control. If you own the property under personal name and have employment income, any rental loss could be used to reduce the tax payable on other sources of income. This could result in big tax reductions, same as RRSP, and reduce the overall taxable income. If rental property was purchased jointly with your spouse, not only you can split the rental gain or loss on a yearly basis, you can also split the capital gains or loss with your spouse when you sell the rental property. You can watch my video 10 ways to reduce the capital gain tax on the sale of rental property, linked at the end of this video. If you were planning on making RRSP contribution for year 2023 and year 2024, to bring down your taxable income, you might want to consider deferring making RRSP contributions to future years, since year 2023 and 2024 look to be high interest rate years, therefore rental loss could be significant. If you already brought down your tax bracket by claiming the rental loss, any RRSP contribution might not give you the juicy tax refund due to tax bracket being already low. It's better to keep the RRSP contribution room for the future years when you have high rental income to offset or need to reduce capital gains when you sell the rental property. Please note, if you have rental expenses exceeding the gross rental income, you have incurred net rental loss. You can deduct rental loss from other sources of income, but you cannot use capital cost allowance or depreciation to create or increase the rental loss. Since net rental loss is not considered a capital loss, it falls under the category of non-capital loss. Non-capital losses can be carried back up to 3 years to recover previous taxes paid, but can be carried forward 20 years to offset future tax liability. Whereas capital losses can be carried back up to 3 years, but can be carried forward indefinitely. You can watch my video 3 missed tax deductions for real estate investors, linked at the end of this video, where I talk in detail about capital cost allowance tax deduction. That's all for this video. If you think information like this can benefit someone, please like this video. Also consider subscribing so more financially savvy people like you can benefit from this information. Thanks for watching and see you in the next video.